All right, good morning, everybody. Welcome back to the channel. So we have another weekly trade recap, and this is actually the first week I have not taken, or this is the first week I've taken one trade. There was only one trade I took, and I'm actually proud of myself because I didn't force trades. I didn't see opportunities when the opportunity was given until after the fact, of course. But yeah, so Monday and Tuesday, very choppy days. Monday was a Labor Day, and then Tuesday it was the day after Labor Day, so the market was still a little bit of choppy. So there was no need for me to even take a trade or even consider taking a trade. Well, actually, I did consider taking a trade, but I just ended up not taking one. Anyway, so Wednesday hits. On Wednesday, if I'm being completely honest with you, I did not even see this setup until after the fact. And same with the other couple days. So, for instance, Wednesday we had a retracement back into these key levels and these internal lows been taken out. So we had internal low takeout, and of course these lows here been taken out as well. And then the market actually just chops like crazy. I believe there was news this day. I don't think so. That's the bank holiday. So we did have 10 a.m. news that day, and we also had news at 9:45, but that was the manufacturing PMI, and that didn't really cause the market to react as much as I thought it would. But we had the ISM manufacturing PMI and the ISM manufacturing prices, and those is what caused the market to react the way they did. As you can tell here, we had 10 a.m. news from this blue candle, and the market finally closed above these highs. I didn't see any opportunity. I didn't see any trade. There was this fair value gap here that I wanted to see filled and respected, but we closed below it. And honestly, once we closed below that fair value gap, I just didn't want to consider taking a long from this position. And I'm at practice while this is happening. Normally, I do morning practices because of my schedule, my classes. So I was looking at this setup the whole time, and then honestly, once I saw the market continue moving up, I actually just gave up on the trade because I didn't see any more opportunity. Here's what happens. I turn off my phone because of course, I'm not taking my computer out on the golf course. I turn off my phone, and we get this move that happens. And as I see this move happen, I see the market just dump. I have no idea why the market dumps. We get this massive continuation to the downside, and the market absolutely just skedaddles to the downside. Later on throughout the day, I was like, why is the market reacting like this? Then I realized something. We took out buy side liquidity that was from September 1st at 1805, which is, I believe, 587. I believe, eight, which is at 6. If that's the correct military time, I think that's 6. So 6:05 p.m. when the market opens back up for the Asian session, we created a high. This high gets taken out. Not only does this high get taken out, but in the 30-minute chart, there was this bearish fair value gap that was never mitigated. We had this bearish fair value gap, and we also had a inverse fair value gap, but this one was we already rejected off of that zone once. Actually, no, we haven't. So yeah, we had a inverse fair value gap and a bearish fair value gap that needed to be rejected off of. That's exactly what we got. We got that rejection. We swept liquidity. This is the perfect opportunity to take a short position because we know exactly what the market is wanting to do. Once we see those rejections off of those key levels, it's important that we pay attention to those key levels. Later on into the 5 minute, we don't see anything, and I'm honestly looking at the charts at this point because once I see this move, and right now it's 11:10. Normally I get off the charts at 11:30 because I like to be on the charts for 2 hours maximum. If I can't find a trade inside those 2 hours, I'm just not taking a trade. So what happens next is we make massive moves down, But in the 5 minute, we never had that market structure shift. So in my head, I still think that this is an uptrend because of this massive move that we just had to the upside to take out that liquidity. But since we did take out that liquidity, the market is more than likely going to reverse off of that zone to chase more liquidity zones, which it did. We took out these lows, we took out these lows. We did not take out these lows down here. Oh, you can't see that. We took out these lows here, and then we took out lows here. So if you don't see what I'm talking about, we take out lows, and we take out lows here. Those were the only lows that were taken out, but this was still an opportunity that I missed. We had this market structure shift to the downside, and the trade literally followed plan, followed exactly where I needed it to. Man, this is. I'm not gonna get too mad at myself because I didn't see the opportunity, but this was an example of an A+ setup. We get this market structure shift to the downside with displacement creating a fair value gap. Once the market retraces back into the zone, since we have this market structure shift at this zone, it's important that we find key levels. We had a key level here, but this key level was already rejected off of, or this fair value gap, because we closed below this bullish fair value gap, retraced into it, then went lower. So we don't want to see we what went through my mind before is I wanted to see the market come back inside of this zone, but I did not see that happening once we closed below these lows. Like I said, we had displacement with also a new fair value gap. And honestly, it's 11:40. It's already past my trading hours. So I'm not going to break my rules just to make money. That's the last thing that I would do. And I did really good with that this week. I'm not breaking my rules. Now, what I could have done, I could have been like, okay, what we can do is we can place a short position here inside of the fair value gap, but it's not inside of equilibrium of that fair value gap. So, for instance, we normally go for 1-to-1s with 100 tick stop losses and take profit areas. I would have been, I would have gotten stopped out. I would have gotten stopped out and I would have lost 500 for the day. I didn't take the trade because the market did not retrace back into the zone like I needed it to. And if it did retrace back into this 50% equilibrium, then I still would have been fine. I could have went for a 1-to-3, honestly. But like I said, it didn't follow the rules I needed it to. And I was not going to break my rules just to make possible money. You know what I'm saying? So that was Wednesday. Then next we had Thursday. Thursday was a very weird day. And the reason why it was a weird day is because the market did exactly what we needed it to do. We just never got that retracement back inside of back inside of the zone. So kind of going into Thursday, we had our liquidity sweep. We took out sell side liquidity, which was the Asian session lows. Whenever we sweep session lows, high time frame lows, previous day high and lows, weekly high and lows, monthly high and lows, we always look for reversals from those key levels. And that's what we got here. We had a liquidity sweep from these Asian lows, and we respected it a lot. And I believe we actually entered back inside of a fair value gap that needed to be respected. It's not a 4 hour. But we entered inside of a 30-minute fair value gap, which was already mitigated once. And this was the zone I'm talking about. So we already respected this zone once. We came back inside the zone, rejected off of this fair value gap, not only rejecting, but taking out sell side liquidity, which is the Asian lows. So since we have that knowledge, the only thing we're looking for is opportunities to go long. And once we get a closure above a 5-minute high, we see that this is considered a market structure shift. So honestly, I need to move this to the middle because this stuff, I don't like when this, because you can't really see that it's a save as. Just replace. Okay, so there we go. We get a 1 minute market structure shift here, and we also get a 1 minute retracement. But the issue is that I didn't even see it. Actually, I lied. I'm gonna be completely honest with you. I did see it. But I wasn't confident that it would work. And this was such an A plus setup. I didn't see the opportunity. I didn't take advantage of the opportunity. So we had, like I said, we had this 5 minute market structure shift. We closed above these highs, creating a new fair value gap. We had, okay, let's get rid of this. This is a lot going on here. So the first thing we created was this inverse fair value gap. I wanted to see the market retrace back inside of this inverse fair value gap before going long. We do not get that. Okay, cool, respectable. The next thing we're looking for is this fair value gap to get filled. We don't get this fair value gap was not created until 10:25 a.m. That's when this fair value gap was created. But we didn't get no retracements inside of that zone either. And honestly, once I saw that we didn't get any retracements, I didn't look for any trade. Then once we got to the 1 minute, did I just lie again? I think I just lied again. Okay. Once we got to the 1 minute, this is where things get interesting. We get to the 1 minute and we create this bullish fair value gap. We have another bullish fair value gap. We have all these key levels that we're waiting for the market to react off of and possibly respect. One thing I didn't consider is that since we've created this high and this level up here, we don't really want to see the market come back down to create lower lows because we want to see the uptrend being respected. And that's what we get here. This was the 5 minute market structure we got. Closed above, retraced back inside of this zone of imbalance, and we respected it. This was honestly, I got so hesitant when the market retraced back into the zone. A part of me really wanted to take this trade, but the other part of me, the unprofitable part of me, was like, okay, let's not take the trade. Let's just see what happens. Let's wait for the perfect opportunity. We still have 5 minute fair value gaps that need to be mitigated and this and that. Not realizing that I was putting myself in a hole. And this was such an easy grab. This was literally A plus. This was the definition of an A plus setup. I just did not take it because I was trying to be Mr. Perfect. And I'm getting better at not being Mr. Perfect, which is the 1% that I am getting better at. Anyway, like, look at this. We had this move and the market just absolutely goes insane. But it is what it is. I learned from this one for sure. And I think that's the main important thing. Last but not least, we have Friday. Friday was another interesting day. And the reason why I say that is because I actually missed out on this trade because of just not understanding. I'd say I think that'd be the best way to put it, because it's not like these are all-time high. Actually, no. I lied so hard. We have highs all the way up here that were taken out. We had buy side liquidity here that was taken out. And once we saw this buy side liquidity get taken out and respected, I honestly should have went for a short position here. And what we get Friday, I believe there was news on Friday too. That was yesterday. Yes, we had 8:30 a.m. news, and the market opens at 9:30 a.m. Eastern time for the New York session. So this move happened an hour before market open. So at 8:30, which should be here, yes, this zone is on the market. As you can tell, look at the sell side liquidity that was created. Had sell side liquidity being created, made major moves up to take out more buy side liquidity. And once we took out that buy side liquidity, we reacted so well off of this zone. What we end up creating was an SMT, and this was a 1 minute SMT that was created. Once this 1 minute SMT was created, the main important thing for me to look for here was just a retracement, and reaction off of these key levels. So, like I said, we had the SMT being formed. We've already taken out liquidity, which is buy side liquidity. Only thing we're looking for now is just short positions, and we missed that opportunity today. I mean, yesterday, but that's completely fine. That's completely fine. So my thought process going into this trade was, okay, what we're looking for is honestly, what we really want to see here. We really want to see these lows get taken out, so we can get rid of some noise here. All these distractions, so you guys can actually see what I'm talking about. So we created this imbalance here that was respected, reacted to create that SMT. Cool. We closed below this most recent low, but this is not a part of the uptrend that I see best fit. We end up closing below these lows, and at that point, that is the signal that this is going to be a market structure shift, because during this trade or during this trend, we had a low, then we had a high. We had a lower low, then we had a higher high. And since we didn't create a higher high into these SMTs, I didn't consider these as market structure shifts. That's why I waited for this one, because this was the most recent low before that most recent high that the market reacted off of to come back down and close below. Once we got that reaction, that is then where I should have considered taking positions, short positions per se. What I could have done here was been like, okay, since we closed below these lows, I could honestly take a trade and enter in here when the market retraces. But like I said, the market wasn't creating any openings and any opportunities for me. And now that I think about it, now that I see that we created this low, we created this high, low, higher high, and this low, I think the best thing here would be to. Dang, this is actually interesting, because the best now that I see, the best opportunity would have been to enter into this 5 minute reversal, or not reversal, but this 5 minute inverse fair value gap, and yeah, that actually would have been the trade. That actually would have been the trade. So what? Yeah, that actually was the trade right there. This was the move we got. Could have went for that 1 to 3. This was a really easy trade if I had paid attention to these lows. Anyway, I missed this trade, and what I was looking for at this point was just staying as patient as possible, because yes, we did miss this trade. Yes, we missed this opportunity. I look for more opportunities, and that's exactly what we got. We got more opportunities when the market actually retraces back down to take out previous day lows, and that wasn't. It was an ES. There we go. That's right. I think ES had the opportunity, if I'm not mistaken. Either way, that trade wasn't something I wasn't going to take. Anyway, so on Friday we had this previous day low get taken out. That's correct, because this is the S&P 500. Okay, now we're cooking. So we had the previous day low get taken out, and we created a SMT. Once I saw that SMT being created, I was like, there's just no way this market is going down lower. We created a bullish SMT, and we also swept out previous day lows. And honestly, we gotta persevere. But honestly, going into this trade, once we saw the market have this market structure shift, I instantly placed a short position in the 1 minute. So we had this zone get swept. We had a market structure shift. Let's put this back in the middle because you guys cannot see this whatsoever. Let's get rid of this zone. I really wish you would turn off that water. Stuff's kind of loud. But we had this market structure shift. Market retraces back into the zone, and I placed a long position once we retrace back inside of a 1 minute bullish fair value gap. And this was the zone I looked to enter into, which was here, as you can tell by where I entered at the 6467.75 price range. We placed a long position once the market re-entered here. And for S&P 500, we go for a 40 stop loss, a 40 take profit, a 40 take profit and stop loss. Going for that 1 to 3. Once we went for this 1 to 3, I felt pretty confident that it will work out and play out as it should, but we just consolidated for Lord knows how long. Once the market closed above this 1 minute high, which was also a 5 minute high, once we closed below that or above that, we moved everything to break even. Once everything was moved to break even, then at that point we saw a break even trade. There was nothing to worry about, nothing to even stress about. So we had a break even trade at about $47. That's what we gained for Friday. And I'm not really mad that it didn't work out because market literally came back inside of this zone, came back inside of that 1 minute fair value to go up a little higher than what was given. And since this is currently the weekend, I don't know how this market is going to react. So the market may come back down and finally take out these lows. But either way, it was still a break-even trade once we entered back into the zone. So I'm not really mad. Live and learn. That was the week. That was my trading week. This video actually went a little longer than I wanted to. But until next week, I'll see you guys again. Peace out.